Hello traders, this is your weekly review for the EURUSD day trading strategies. We had the holidays, then I got sick, and then I wasn't sick for that long, but following that I was really tired, so there hasn't been any video updates in a while, so I thought I'd go through this week because there were a few things that definitely could have tripped a few people up. I was trading fairly conservatively, and 10R for this week, we had all 5 days of trading, but there were a couple days where I took no trades. Monday, Tuesday, I didn't take any trades, so all the profit came Wednesday, Thursday, Friday. About 10R, potentially, depending on which trades you took, and that's about an average profit per day of 2R. So that's just taking 10R divided by 5 trading days, averages 2R. If you can average 2R a day, you should have no problems in your trading career. Even getting 1R a day is very good. Especially when we're trading this long, hour and a half to 2 hours. The win rate this week a little off, only 4 trades this week, so 100% win rate on those 4 trades, but that is not rare. Average trades per day, 0.8. That is way below normal. Normally I have about 2 trades a day. Reward to risk, 2.5 to 1. That's right about where it should be. We want to be making 2.5 to 1, or maybe even a little bit better on most of our trades. All our trades came from rounded tops, rounded bottoms. Lately, that has been more of my focus. I'm just kind of watching for those. So that's where most of the profit came from. So let's go through some of the charts. I got them pulled up here a little bit bigger. That's the wrong week, 24th. So Monday I did not take any trades, but there was a couple possibilities in here. So this one was not a bad one. So we'd had this move up, this pullback, this move up here, and then we don't make a new swing low compared to this one. But then we do move right back up to the high, and then we do make a slightly lower swing low here, and then we just kind of chop around here. So there was the potential to get in here, but if you got in on this one, this one was a little bit bigger stop loss, especially since not a ton of movement. And this is a little bit tinier stop loss, it looks like. So I didn't end up taking anyone. I was just kind of looking at this as sideways chop. So if you did get in here, I'd have no problem with that. There was a potential rounded bottom here. We had this drop, this little pop up, a drop to a new low, and then this nice shift to the upside, but then we just came right back down. But we didn't really drop below it, we didn't stay well above it, in which case we would have had the rounded bottom, maybe if the trigger candle had occurred up here, but it went right back to the low. And so this kind of perplexed me a bit, and I just decided to stay out because I couldn't quite figure out what was going on. If you looked at this as a double pump, that's a pretty big stop loss. I would not be taking that one either, especially in lower movement. We had lots of movement over here, but we only really care about the last couple hours. How is the price moving recently? Not a lot of movement. So opted to stay out here, and then we just get this, I drew it in here just to show, like, we just kind of have this expansion and then we start contracting, but we're really just moving sideways. A possible one here, I just kind of made some notes, like not a great one, which is why I opted to stay out, especially in low movement still. At this point, we've moved, a couple pips here, 5, 10, 15. So we're like maybe at about 15 pips. Oh, right here I put down to about 13 pips in the last 2 hours. So it needs to be a fantastic setup for me to take that. This is not a fantastic setup. If you measure out this, and then you measure out this, and if I recall from memory, this wave was actually longer than this wave. So that's an acceleration. This downtrend actually went more, sold off more here than it did initially. So that's, it doesn't mean the price can't turn around like this. The price could have popped higher here, and it did a little bit. But it's usually a little bit more likely to fizzle out when we get that acceleration into the low, because there's just, there's a lot of sellers there. So for the price to turn around and bounce, it's like those sellers have to pretty much all disappear or really get scared and become buyers. And usually we get more of this type of action where, yeah, we may get a little push, but it tends to fizzle out a little bit more. That's why I tend to avoid, and I'll write acceleration or, just accelerated too much into the low, because, yeah, I've just noticed those have a little bit of a worse win rate when that happens. So, opted to stay out through this. And what else did I put here? Low movement. Yeah, decent trigger. There's like, a couple little candles in here which you could have used as a trigger. If you're going to take a trade in kind of low movement, you want to consider the fact that the price is chopping, especially when it's chopping sideways like this, that you may not just get that run you're expecting. It may not just run to your 2.5 target. If conditions are kind of crappy, then maybe before you take that trade, consider the possibility of implementing some sort of trailing stop loss or something so that you get something out of it, but you're not just holding the bag as the price comes right back against you, because this is pretty much what the price has been doing. To assume it's going to do otherwise is wishful thinking. So this is pretty much exactly what the price has been doing. If you did go long here and you held it through, this is kind of what the price action was doing. Next day, same sort of thing. Not a lot of opportunities. This was actually a decent one. It just didn't quite set up for us. So I was looking at this as the last swing low down here. So once the price drops here, we would have had to get a little bit of a pullback and then drop again, and instead it just keeps dropping away. So no entry there. We're also under the 15 pips of movement. You can see each one of these is 5 lines is 5 pips. So 5 pips, maybe like 3 or 4 pips there, and about 5 pips there. So we're just under that 15 pip mark at maybe about 13, 14 pips. So it doesn't mean you cannot trade at all, but it just means it better be amazing. And right here, we're kind of in the middle of the range. Not interested until it increases overall volatility. And not a ton in here that's super attractive anyway. There's no rounded bottom here because we just shot straight into this low. There's no slowdown or anything. So no potential for a rounded bottom here. A little bit of a higher swing low there, but again, not anything too compelling. Even if you looked at this as a little rounded top, the price drops below the swing low, and then it just kind of keeps running lower. So this was the only one which, and I didn't note it here, I did note this one, but this one was a little bit compelling. We'd had the false breakout and a nice shift back to the upside. So a little pause. The one thing I didn't like about this, again, that aggressive sell-off. We'd moving really choppy, aggressive sell-off, and we pop back up. And we didn't clear. Why I didn't take this one is we have this swing high here, and if you draw it across, it was up here, and we never quite had that shift up. So this candle wasn't a great trigger candle for that trade because we hadn't quite shifted up yet. We'd had to move up, but we hadn't taken out a swing high yet. So all those kind of things, a bunch of kind of negatives against this trade. So I opted not to take it in low movement. Opted not to take it. Yes, it would have won, but if we take lots of those trades with a bunch of kind of negative features to them over many trades, we're probably going to end up worse off and losing more. And then no real rounded tops. We have this kind of like, I don't know, I guess you'd call it maybe a double top, pops up, pulls back, pops up. So if you took one on this little candle, that's not a bad trade. It's not a great looking rounded top at all, but we have had that shift lower, but you may have got just triggered out by a hair on this candle here. So again, I just kind of looked at it all, said we're still in pretty low movement. This isn't really a rounded top. It's more like kind of a double top or something. So it doesn't really fit the parameters, so I opted to stay out. We had almost that same situation here as we did here. Would have worked out. And just, yeah, couldn't quite figure out, this is really the swing high. This move started up here, so ideally we should be seeing a move back above here. And big acceleration to the downside here. We're basically flat, big drop. So again, it's not really technically even a rounded bottom because we're just moving sideways. We have this big sell-off. And then we don't really have a shift up. At this point, we've shifted up, but we've had a couple waves. It's been a little bit slow. So in real time, I viewed this as this could kind of go either way. And it did end up going higher, which often happens with the false breakouts. This was a nice false breakout. We start making price waves inside, which I noted. That was a very good sign. When the price moved up in here and made a swing inside the old range and then started moving back up, that was a pretty good sign that this was a false breakout. I don't remember. Some of you might have been around several months ago, and I was trading a broken break strategy, or BBs. And that's this kind of trade here, where we break outside a range, we move up, and then typically it's going to run to the other side of the range. So this was definitely a BB type trade. I have not been trading them, but if you took it for that reason, good on you. And if you made some money there, that would have been great. So, this kind of area was a potential, even if you got in here or here, they all worked because the price was running higher. But in terms of, was it one of the ones in the trading course? Debatable. This little rounded bottom, little pullback, pretty clear price waves. And yeah, we take out this little swing high. We have this pause. Someone pointed out that this bar went above that bar. So that was a potential trigger. If you got in that quick, you probably had to have been watching the price exactly, and then as soon as it hit it, you were right on it. I don't even recall noticing that. And this brings up a good point. Some of you may be watching the price, and you have a price in mind that you're going to buy it. There's nothing wrong with that. I tend to watch more the chart. I want to see the price move above where I'm watching. So, at this point, I'm kind of watching for the price to move above these price bars. And until I see that visually, I'm probably not clicking that buy button. So I'm a little bit more calmer, relaxed, and I'm not. We want to avoid that mind frame of, where you're like right on your mouse, right on your chart, just like, okay, I'm ready to go, boom. Because I don't think it's a great mind frame to trade from. And that's not how I trade. And so if you trade that way with these strategies, I don't know, you might not quite have the same success rate because I'm kind of trading from a different mind frame. So, just kind of maybe remember that we don't necessarily want to get into trades. We don't want that idea that, I want to get into as many trades as possible as quickly as I can. If the price runs 0.1, 0.2 pips past our, kind of ideal entry, that's okay. The price is moving in our favor. If we're a split second late, that's okay. I don't mind that. It's never hurt. Or hasn't hurt overall. So maintaining that calm mindset, I think, is more important than trying to click your button as soon as the price moves 0.1 pips past. I kind of like to see it more visually. And so I didn't even notice that while I was trading, because it probably stayed there for such a small amount of time that I was just kind of watching to see if the price kept moving up, and it didn't, so there was no trade. And then we have this consolidation breakout. ran up, cleared the target by a fair bit. If you'd used a little bit bigger stop loss, it might have just got you out. But overall, and this one went a tiny bit higher, so you may have gotten out there too. After that, nothing. This is on to Thursday. This one, yeah, I debated this one for sure. Really strong run down here. Pop up. This is still a pretty strong move down, but if you compare this down wave to this down wave, this one's smaller, at least visually to me, compared to this big sell-off here. So there was at least some slowing going on. Big drop, followed by a little bit smaller drop. This just didn't quite get up to that prior swing high. If this had, climbed another pip and gotten up here, this is a no-brainer. Get into that trade. I just, questioned it a little bit, and then the stop loss was a little bit bigger too. That's okay right after news because we usually get, some fairly big moves. We had lots of news out there, 3 different things. So the chance of a decent sized move is pretty good. So a little bit bigger stop loss is fine. But I said, I probably should have taken that one. Given the context and everything, like we missed that swing high just barely in a pretty volatile time. So, and then I like this little double pump too. So we had this pop up, drop back down, a little pop up, drop back down. This next little sell-off makes barely any progress below this last kind of bottom part of this green bar. So that's like we went up and then we tried to pull back and almost it just couldn't go anywhere. So that's a pretty good sign. And so given that in the moment, probably should have taken that one. But again, it's not perfect, so that's okay not to take it too. This one, pretty nice, move up, close to the high, pull back, definitely a new high there. So we're starting to get that, just barely making progress, which is what we want to see. This is the last swing low. We drop below it. Ugly candles here. You definitely don't want to be taking a 7 pip stop loss or 6 pip stop loss. So give it a second. Wait for a better trigger candle. We're still in that vicinity. We're still in the area of the pattern. So no reason to negate this just because you had a couple big bars. Wait for the small pattern. This one just barely got out. So if you were trading this one, hopefully you did get out. This is the swing high here. We had this sharp sell-off. So if you're looking for a rounded bottom, it doesn't occur till the price moves up here. At that point, we had 1, 2, 3, 3 little swings. It's a little bit choppy to call that a rounded bottom. That'd be a variation pattern. Usually we want to see just that sharp move back the other direction, shows a strong change in direction. This is a very choppy change in direction. If you did take it, you ended up winning, so no problem there, but not an ideal pattern. We also have this, pretty big acceleration down from this little last drop here. So not an ideal rounded bottom if you were looking at this, but if you did take it, at least your trigger candles were good and you did have a shift up. Moving to a new high, swing low, and then we kind of develop this choppiness, and you can see we're just starting to make some lower highs, and this little one takes out this swing low here, and that's kind of the main thing I was watching for. And then we have this big sell-off which takes out everything. So move up, pull back. This is the main swing low to watch. And then, we just kind of have this series of descending highs here. A little bit of extra confirmation. Some tells us, buyers aren't really coming in here. And then, boom, that was a big shift down well below this. But nice bounce up, too. So we want to make sure, you'll sometimes see me write on my charts extended. If this dropped, paused, and then dropped again, I would not be entering that trade. I want to enter it near the former pattern. And that's just because in the Forex market, we often get these types of pullback. So once it breaks out, it often comes back to retest. So I want to be entering in the area of the pattern. So nice drop, pullback, nice little trigger candle, sells off. Could have got probably a little bit more out of this too if you used an aggressive trailing stop loss. I increased mine just marginally. I think I put it down, down by this little low here. Thought, it's probably going to take it out. So, but he could have even put it down below this swing low. Don't have to, but really running hard, and can take a little bit extra out of it. Not much on the Friday. This was medium impact news, but it had a pretty big impact, so it didn't show up on my economic calendar, and I just happened to look and see what happened at 6:30. I looked at medium news, quite a bit came out, and so we had this big move on that. So that's something I'll have to look for to see if I want to start including those mediums. Usually it's never, in years, I've never really noticed something like this, so hasn't affected me too much, but maybe some of those ones are important right now just because of what's going on in the world, so I'll look at those and see if I want to add them in to my normal calendar. Run up, it's all green bars, but this is a pretty sizable pullback here. We shot up here and then came all the way back down here. So even though they're all green bars, that's a pullback. We have this little push higher, and then we take out that swing low, nice little trigger candle here. I did say that this was a variation because we'd have this drop, a pullback, and then we drop below the swing low. A non-variation is when we just drop straight below. So we had our push, move to a new high, boom, drop below. That's not what happened here. We did have this little hiccup here, but overall, when you look at this, that's a pretty sharp drop. That is, to me, a strong shift, even though there was a green candle in there. That didn't really bother me because overall, it really dropped quickly. Strong drop, takes out the low within 3 candles. The drop was quicker than the way up. So to me, this little hiccup candle in here, not a problem. Nice little trigger candle. And we have a little bit of extra room there, but pretty close again. Sharp reversal, so no rounded top, rounded bottom. Same thing here. Not really a pattern. If you ended up getting short here, good on you. You made some money. But I'm not really seeing much of a pattern here. But there was a shift, and we did take out this swing low, so we did at least have a shift in trend. So if that's what you were looking at and you happen to get short here, no problem with that. And this kind of got ugly in here. So big sell-off, we'd had this drop, and then I was saying it's already a variation pattern. It's taken us a long time to get back up to this swing high, so it's not an ideal scenario anyway. And then we basically drop right back to the swing low. So there's no rounded bottom set up there. Then we reverse right back to the upside, and so we're just kind of moving in this expanding range. This, if you took something here, I know some of you have been trading these kind of like squeeze plays where the price gets compressed, and this was a decent one. We'd had the swing high here, we just kind of pushed, and nice little long sell-off there, or long candle there, where the sellers disappeared, and then we start taking out and retracing this big down move. So if you got in on something like that, I haven't really covered squeeze plays much, but it is, a decent entry point there. But again, not covered in the course, so I didn't want to. I don't usually trade those or put them on the charts. So that was the week. In terms of what I'm looking for next week, I just want to do some kind of like life stuff, I call it, where I'm not really focusing too much on actual trading stuff this week, but just kind of coming out of the tiredness and from being sick, need to work on my diet for sure and figure out how I'm gonna do that. Also, the trading's rushed, I feel. So as traders, we really want to make sure that our trading's fitting our life. After all, that's at least why I became a trader, so that I have lots of free time, that I get to do other things I enjoy. I don't want trading running my life. I want to make sure that I'm running my trading and trading how I want and how it fits my life. So I'm feeling a little rushed, especially a lot of mornings with working out, day trading, and so I'm gonna have to figure out how I want to reshift that stuff around. And that's an important thing to do every once in a while. Just make sure that you're trading, how you're trading is suiting your life and it's serving you, as opposed to you kind of being a servant to your trading. And yeah, these are all the things for last month. If you want to see how all these methods tie together, how this whole process works of day trading, and check out the EURUSD day trading course. And yeah, full details here. So until next week, happy trading.